So for many years, condos in Toronto were considered one of the safe investments. You would buy one, hold on to it for a few years, and you almost came out winning financially. But in the last 3-4 years, things have changed where the prices have come down about $200,000 in some cases and in some pockets of the city. So in today's video, we're going to talk about an article by Globe and Mail on the topic of Toronto Condo Bubble Burst. And on top of this, we'll be also taking a look at the report by TD Bank. It's the housing report. And I'll be sharing the real numbers and data and stats to show you exactly what exactly is happening in Toronto condo market. So if you get any value out of this content, please hit the like button. Also, please do subscribe to the channel. It really helps a small channel like this to grow. So here's the article by Globe and Mail where it talks about how the Toronto condo bubble burst. So let's get right into it. So here it says, during a July episode of one of the GTA's many condo investor podcast, brokers Ralph Fox and Zen bantered about. Ralph and Zen, they make a pretty good content on YouTube, so I would definitely check those out. So they say a big problem no one's talking about, many problems actually. Investors who gambled on flipping pre-construction units were left holding an asset they could not afford to close on. That is cramped downtown condos. So yeah, we're seeing that today, and we're seeing that a lot in today's time or in today's market, that a lot of people who bought pre-construction condos just with an intention to flip it, not to actually live in those, and those are having a hard time to close on it because over the last few years, the Toronto condo market has been going up. So, and these shoebox condos or small condos were being traded among the investors, and they were making decent money off of it. But now the investors are missing from the market, so there's not many buyers, or there are not many people who want to buy these condos. So that's why a lot of investors or a lot of people are stuck with these pre-construction condos where they cannot sell someone to, and in some instances they're also not able to close on to these condos. So that's a problem. And also, why so many buyers or end users don't want to buy these brand new condos is because they're very small condos where you won't have a good living experience over the long run. So that's why these condos are having a hard time selling it. Further, it says condo sales in Toronto Hamilton area fall to 35-year low in third quarter. So I'm just going to talk about that now. Pre-construction sales have fallen 30-year low, while a growing number of large-scale projects are being called out or being cancelled. According to a new report by Urbanation, a real estate analytics firm, it's a pretty good firm, a pretty solid real estate research firm. I would definitely check out their website. So it says new condominium apartment sales in the GTHA total 319 units in quarter 3 of 2025, the lowest quarterly total since quarter 3 of 1990. Sales were 54% from the year ago, that is it from the year of 2024, and now they've fallen by 92% below in the last 10-year average for Q3 period. So this is one of the bubbles I would talk about. That is the bubble of pre-construction or new condos which are not selling in today's time. And the why they're not selling, or why no one's buying pre-construction, is first of all, typically pre-construction condos are bought by investors, and investors are missing from the market. And why investors are missing from the market is because investors want one of two things, usually either cash flow or appreciation, and both are missing from the market. So that's why investors are not in today's, we are not finding many investors in the market. Secondly, pre-construction condo or new condos are expensive than resale condos which are already built, so there's a gap in the price gap. So that's the reason we are seeing so low level number of sales for pre-construction condos. And also further it goes on to say the development industry blames policy failures, high fees, slow municipal approvals for them to start building more condos or more condos. So that's why down the line, if you've been on my channel before, I've talked about this a lot, that right now builders are not building, and down the line we're going to have that problem of supply, and then it'll be interesting to see how the condo prices fluctuate. So basically right now developers are not able to build because of high fees, slow approvals, soaring labor costs. And overall, if I go through this article more, there's not much talked about the bubble or the stats. It's basically, yes, there's a bubble or correction you want to talk about is towards pre-construction side of things. On the resale side of things, the story is a bit different, and which I'm going to talk about while I go through the TD Bank report. So here's the provincial housing market outlook by TD Bank, and I'm going to go through this report and I'm going to debunk the numbers. So let's get right into it. So I'm going to go back to my slides. So here we can see they're saying we are tracking somewhat firmer third quarter growth for Canadian home sales than we expected in June. This implies that pent-up demand built earlier in the year amid peak uncertainty returned at a larger than expected magnitude. This notion is laid bare by the upside surprises in BC BC and Ontario, where the pent-up demand is the largest. So the sales have been increasing in whole of Canada for Canadian home sales, but real estate is very local. So I'm going to show you the sales number, what's happening in GTA for the condos, and as well as I'm going to show you what's happened for the sales number in downtown Toronto. So let's just see that. So here you can see on the graph, in this year the sales have been increasing in quarter 2 as opposed to quarter 3, what they were showing on their report, what were they saying on the report. And here you can see the sales have been increasing steadily, but this is not the complete picture. What matters, if I compare this, what's happening year over year, the picture or the story is a bit different. So I'm going to show you GTA sales, annual GTA sales from 2020 to 2025. In 2021, the sales number of sales peaked. We had 25,000 condos sold or traded in whole of Greater Toronto area, and now we are at sitting at 12,000 sales, approximate 12,500 number of sales of condos sold this year. Up till this data is up till September for the 2025, and I think by end of this year, we probably will be hitting about like 14 to 15,000 units being sold this year. That number is pretty slow. Maybe even less than 2024. We'll have to see. But the sales number have been decreasing consistently. That's the real picture, and I wanted to show that to you. So now I'm going to go towards downtown Toronto, and I'm going to show you sales numbers over there. So in downtown Toronto, I'm going to focus on CO1 and CO8 area, basically south of Bloor to east of Dufferin to west of DVP. This is downtown core, and here we're going to run the numbers here. So here you can see for CO1, CO8 area, the numbers, a number of sales, they have been also increasing steadily from the beginning of this year up till now. And the number of sales peaked in the month of July. Sorry, it's cutting out here. It's 365 or 375, my bad. And if I show you what's happening year over year, the story is a bit different. So here we are. So here you can see in the year of 2021, there were 9,000 condos, which almost 9,000 condos which were sold. And now in the year of 2025, up till September, the number of condos sold are just shy of 3,000. And I think by end of this year, we're gonna touch the number of 4,000 condos being sold in downtown Toronto. So not many sales are happening for condos as of now. That's what we're noticing, both in GTA and as well as in downtown core. Now let's go back to the slide. So it goes on to say, however, the stronger Canadian sales performance implies that go forward gains don't have to be as firm to be still in line with the demographically supported sales levels. Accordingly, we have downgraded quarterly sales growth in Q4 of 2025 and through as much of 2026. If you see this chart over here, in the quarter 3 of 2025, the green bar is for home sales and the yellow one is for home prices. So they are saying quarter over quarter change is the number of sales have increased, but for the year of 2026, you can see the year over year change or quarter over quarter change is not too much. And I think but in the year of 2026, I don't think so there's going to be high growth of prices or we're going to see high growth of sales. There will be modest growth for number of sales, but for prices, I don't think so there's going to be much of upward pressure or price growth for condos in Greater Toronto area. So further, it says the GTA condo market continues to be a notable soft spot, which we agree. Even with some improvement in sales activity in recent months, listing remains highly elevated. So if you see on this chart, this is the chart for GTA active resale condo listings, and it has been increasing since I would say 2023 onwards. It has been increasing and it's all-time high. So if active listings increase and the number of sales do not increase, then the prices go up. So if you see on this chart, this is GTA condo sales. Sure, the number of sales have been increasing, but they have not been in the number of sales have not been increasing at par with active listings. Basically, active listings have been increasing at a higher rate. So that's why when rising sales and falling listings is equal to upward pressure on prices, but the number of sales are falling and number of listings are rising, then we see a downward pressure onto the prices. And that's what we've been seeing in the last, let's say, 2 to 3 years, where the active listings have been increasing and number of sales have been decreasing, and that's what is putting downward pressure onto the prices. Now let's go back to the article again. So it says further price concession are probably required before the market achieves a more balanced position. I more or less agree with this. We're going to see further more downward pressure for condos in Greater Toronto area, and especially the condos which do not have a good layout, not the best location. Those condos, we're going to see a downward pressure on those condos. And also the condos which are brand new condos which are coming to the market, those are small shoebox condos, not so livable condos. And for those condos are going to see further downward pressure down the line. And on the flip side, the condos which have a good layout, located at a solid location and are in a good building, those are still moving in today's market, and I'll stand by with my statement. Yes, they are still moving in today's time, and they're still holding their value. We're not seeing that much of a downward pressure on those condos. Okay, helping grease the wheels is the fact that condo completions are dropping rapidly. So I'll go back to the chart, which I pretty much use in many of my videos here. So here you can see the condo completions were highest in the year in the are the highest in the year of 2025. That is new condos being built and being delivered in the market. So that's the highest in 2025, and in 2026 onwards and 2027 onwards. So we're going to see less number of condos being built and being delivered to the market, because right now builders are not building, and it'll be interesting to see what happens from 2028 year onwards. We'll have to see how that pans out, because right now builders are not building, because the supply which we are enjoying right now, or the buyers are enjoying right now, is because builders were building in the year of 2021, 2022, or even in 2019, sorry. In those areas, builders were building aggressively, but right now builders are not building. So we'll see how that pans out. So I'll go back to the article here. It says affordability in the condo spaces has improved due to dropping prices. Totally agree with that. In fact, the pandemic era gains in the GTA condo market have all but evaporated. So this is what I meant to say at the start of my video, that the condo prices, they have come down drastically. If I show you how the prices have come down since when the market was at peak in February, March of 2022, in downtown Toronto, they have come down about by $218,000 from the peak of February of 2022 up till now. That's quite a downward jump for condo prices. And when the market was at peak in March of 2022, it has come down about by $167,000 in whole of Greater Toronto area for condos. That's quite a jump. So now let's talk about what's next for condo market in Greater Toronto area. So prices likely to stay flat, or in some cases we might see downward pressure onto the prices for condos, especially for condos which are not the best ones. For example, the one which does not have a good layout, the one are not located in a good building, or not located at a good location. We're going to see downward pressure for those condos. But on the flip side, the condos which have a good layout, basically good condos, they're going to hold value, or in some cases we might see upward pressure, but not too much. But the reason I'm saying is because there's so many condos available in the market, but there are very few which are good ones. So that's the reason. Speaking of prices, let's see what TD Bank has the market outlook on that. So let's talk about that. So first I'm going to talk about home prices. So I'm going to go towards Ontario. So in 2025 fourth quarter, they're talking about the prices will come down by about 3% quarter over quarter, and by 2026 the prices might go up by 3%, and then in 2027 forecast is that the prices might go up by 4%. Sorry, this is not quarter over quarter, this is year over year, my bad. So this is 3% is below from the year of 2024. And now I'm going to go back to the slide. So now sales might rise slightly in the near term. We might see that, but it also depends upon how economy also performs, because right now overall economy is not the best. So it depends upon interest rates, employment trends, and overall economics basically, and trade deal with the US. Talking about interest rates, so let's see what TD Bank's rate outlook is. So if you see in quarter 4 of 2025, this year, they were right on point. We have come down to 2.25, and I think the interest rates are going to remain at this level. It's a pretty decent rate in my opinion. So rates are going to stay at this level. Second is employment trends and overall economic growth. So let's check that out. So here, as per the TD report, the employment rate forecast is for the year of 2025, we are sitting at unemployment rate we're sitting at is 7%, and then next year they're anticipating to be 6.9%, and then they're on 6.3%. So we'll have to see how things turn out to be. But right now the overall job market is not the best, so that also has a direct or indirect impact on real estate prices, and as well as the number of sales. And third is Canada's trade deal with the US. That has a huge role in terms of number of sales happening in the city, or basically direct or indirect impact on the real estate industry or real estate market. So yeah, we'll have to see how these pans out on these factors. These three factors are going to play a huge role. So we'll have to see how things turn out to be. But overall, as a buyer, if you're someone who's looking to buy and hold for the next 5, 6, 7 years, I think that it makes sense for you to enter the market. Other than that, if your horizon is shorter than that timeline, then I think it's a risky business. I would it's better to rent in that situation. That's my opinion. So let me know. I hope I was able to give you some value today, and if I did, please hit the like button. Also, please do subscribe to the channel. Thank you so much for watching. See you in the next video.